Thank you very much for staying tuned here on Smooth 98.1. It's time for us to talk business in Business Express 981 with Rotus. Morning, Rotus.
Good morning, Ayo. Good morning, Lego. I missed you yesterday.
I missed you too, actually. I miss being on the show. How are you?
I'm fine. I'm fine.
You
Welcome
look
back.
good.
Thank you.
Thank
Thank
you.
you.
All right, now Rotus isn't alone. We have the pleasure of the Deputy Managing Director of Afro Invest for West Africa. His name is Mr. Victor Ndukuba. Good to have you on the show this morning.
Good morning. Thank you for having me.
And,
Thank
and
you
he's
for
been on the
coming.
show before. He's been here before, so he's
Oh,
familiar with
yes.
the area.
Well,
Yes,
good to
yes.
meet you all for me, and thanks a lot for coming
Thank you.
back. We must have
Pleasure
done
meeting you.
something right for you to come back.
He's deeply knowledgeable about his stuff.
Thank you. All right,
Thank
let's
you.
tell you how you can get involved in the conversation this morning. Simply send your message to WhatsApp 0809 4440981. Don't forget we have experts in the house, so please take advantage of this. And then on Twitter, we are Smooth981FM. Use the hashtag Business Express 981. On YouTube, we're streaming live. Use the live chat option to do this.
All right, thank you so much. So I know someone sent a message yesterday saying, Rotus, you've been ranting lately about government policy. Let's talk about the news and the different sectors. So that's what we're going to do today. All right, we're going to make you happy. I can't remember who sent that message, but Afro Invest is releasing their banking sector annual banking sector report. Of course, I think it's coming out next week.
Officially to be launched on Monday the 18th.
Fantastic. Okay, so cool. So today we're just going to run down the some of the contents of the report, and Mr. Ndukuba is going to take us through that. But let's start from the top. How about we start from the global macro environment? Since we're a global village, what happens overseas affects us, and then we now go all the way. I guess we go from there into Nigeria and then the financial sector. Let's start with that.
Yeah, so thank you again for having me. The Afro Invest Annual Banking Sector Report essentially chronicles the developments in the banking sector. But of course, the Nigerian banking sector is subject to the macro, which is, of course, all of the political and economic factors that shape what happens in the Nigerian space. Nigeria itself being connected to the global economy, therefore is also essentially subject to some of the vagaries of what transpires in the global economy.
Right.
2019 has largely been shaped by the global trade war, where the U.S. and China continue to essentially slug it out for dominance in the fiscal space, and the effect of those maneuverings, as well as some of the other things happening in the Middle East, where Iran and Saudi Arabia continue to essentially struggle for supremacy,
Yeah.
has also begun to shape, the global economy. Of course, you have to look at what's happening in England, Britain as it is, with Brexit, and the dance with Europe, and whether or not they want to be part of the larger European Union and the European market.
Yeah.
So these are the factors that have essentially shaped the broader global economy. Unfortunately, all of these are negatives, and therefore they've impeded growth. We've seen both the World Bank and the IMF revise growth expectations down markedly. Initially, starting the expectations were that the world would grow at 3.6%. Those projections have been revised down sharply to about 3%. And of course, it had a knock-on effect on several other markets, including Nigeria.
Yes, yeah. They downgraded us as far as our outlook as well. Okay. So what about domestic environment? What about?
So on the domestic front, we also continue to essentially see very sluggish growth. GDP numbers are right about 2%, which is significantly underwhelming.
Under population growth as well. Yeah.
So long-term, potential GDP growth should be about 7.1%. So we're significantly underperforming that potential. And then worse still, like you just mentioned, population growing at nearly 3%.
Yeah.
What it means is that we are actually growing faster than our economy is expanding. So in principle, we are creating essentially more and more economic challenges in terms of unemployment, in terms of poverty.
Yeah.
That's just the reality. That's what the numbers are telling us.
Yeah. Oh, wow. Okay, so as far as the financial, banking sector financial performance, it's the most active on the stock exchange. Yeah. What have you seen?
So I guess to dovetail into the banking sector, we've got to understand some of the variables that shape that space. Of course, the key indicators, some will say, well, fiscal policy, which is essentially what shapes how the economy itself evolves, but more importantly, the macro, monetary policies of the central bank. those in effect essentially watch one thing. The primary objective of the central bank is price stability, or just continuing or managing inflation. Inflation has sort of moderated from the highs of nearly 16%, or at least I think over 16% actually.
Yeah.
We're right about 12% now. Unfortunately, it is now sticky and stubborn.
Thanks
Our
to the
long-term
border closure.
expectation was that
Go ahead.
inflation would sort of moderate about 11.5
For this year?
year on year for 2019.
Okay.
That expectation may not hold,
Yeah.
given some of the more recent changes in the fiscal space that have begun to impact inflation. The border closures, for one, have had an impact on food, and food is I think a 51% contributor to the inflation basket. So
Right.
that's a challenge. That's a challenge.
Oh wow. Let's see now. The as far as the financial sector performance is concerned, what about valuations? How are you seeing valuations for the sector?
Yeah. Okay. So valuations essentially are for companies that are listed, how the market essentially perceives those companies, and what what the market thinks that it's a fair price to pay for the value of the companies. But before we go into all that detail, we need to talk about the sector itself in terms of performance and numbers.
Okay.
So when you look at earnings, revenue, we had projected nearly 20% growth to 4.9 trillion in 2019. And all of this, of course, is still in spite of the low interest rate environment, challenges with interest rate. The sector, however, continues to be challenged on the cost side. Cost to income is going to remain elevated.
Okay.
We think it's going to sort of end the year around the 67% threshold, up from about 65.5% in the previous year, which is 2018.
Okay.
However, PBT is going to grow, albeit strongly though. We anticipate a 15.1% growth to about 1.2 trillion in 2019. That said, the NPL ratio, which is a non-performing loan ratio.
Thank you, because our listeners will ask.
Is actually quite. It's still ahead of the regulatory sort of threshold. We think considered safe. So that's at 7.2%, whereas the sector sort of guidance is that we should try and keep NPL below 5%. Right. So it's trending above that. Although if you look at this side by side, the previous year, which is 2018, is actually down from 8.2%. So there's some positives, but I think the sector itself is in the throes of quite a bit of headwinds.
I have to let me take you back. Sorry, as far as the domestic macroeconomic environment is concerned, the exchange rates. Where do you stand on as far as how? I mean, it's been stable, but there are pressures that the central bank is facing. The big D word, devaluation, has been thrown around. It's rumored, but where are you guys on how the exchange rate has been, and where for going into 2020, where things could be?
The exchange rate itself essentially is a reflection of market forces in terms of demand and supply for the dollar. We need dollars to fund imports more often than not, and how we earn the dollars essentially is through exports. Unfortunately, the lion's share of our dollar revenues come from oil sales, which in itself is challenged on a number of fronts. So the price of the product is not one that we as a producer can determine, except it's shaped by events in the global space. So whether there's a conflict anywhere in the world, or what America does with its own reserves, and whether it is buying or pumping reserves into the market, it's now essentially producers, so it's joined the supply forces. So oil prices have weakened in 2019 significantly. On average, it was about $71 in 2018. This year, it's averaging less than 55. So at a lower price level, even if we were to put more volumes, which unfortunately we can't, because as part of OPEC, we have signed up to quota restrictions.
Right.
So all of that essentially means that we're not getting as much dollars as we used to.
Right.
If imports remain elevated, then clearly demand on the exchange rate. There are ways you normally calculate this in economics. Inflation differentials and all that, which would suggest that perhaps the naira is a little overvalued, considering it's stayed stable at 360 for nearly 3 years now. Long run, devaluation from our numbers. Estimates suggest that we would normally devalue on average about 3% year on year.
Yeah.
So in effect, we should have seen a 3% adjustment in the last 3 years on that number, but it hasn't happened
Because they held it. Yeah.
because the central bank essentially is supplying that market.
Right. And
Yeah.
so, well, I think we're being set up for something terrible next year, but we'll see. We'll see.
Well, I don't know if that's the word setup, but
Yeah.
ultimately it can be managed easily. So today you have broadly two rates. There's well, you could say three. There's a 305 official, which is the benchmark for which the budget and all of the official numbers are calculated.
Yeah.
There's actually a market already, the I&E window, which the central bank itself set up. What we would like to see perhaps is a consolidation of the two rates, where you allow everybody to trade into the market that already exists in the I&E window. That should help, manage and smoothen some of these challenges. But I guess in the CBN's wisdom, there is obviously reason for them to still keep these rates. We continue to watch and just hope that things don't get out of hand.
We will see. Okay, Oluzil, what's Oluzil asking there?
So he's asking, they would like to know, sir, if your views on the Nigerian equity market presently.
Well, I was going to ask. Okay, yeah, I guess. But I guess in relation to the financial,
we can
go
sort
ahead.
of dip into that. Yeah. So
Please.
the equities market has taken quite a bit of a beating in the last 2 years, particularly. There hasn't been a lot of positives to drive activities into that space. Most investors have been on the cautious side and have therefore played either around fixed income or money markets. That has had a major toll on returns in that space. So what you will find is a scenario where, despite all of the sort of low valuations, when you think about it from a relative perspective, there's still not a lot of inflows from investors coming into that market. So the outlook, unfortunately, remains that it's going to be very, very, very challenged. Most investors or investment houses or fund managers are loath to want to channel a lot of resources into that space, considering the pressures that the markets face. Unfortunately, the overhang is more exogenous, it's more external to the market itself.
Right.
So regardless of the strong performance of one or two of the counters, valuations continue to be underwhelming, unfortunately.
Okay.
All right. So Aldo is asking another question. What investment vehicles would you recommend considering the declining interest rate in fixed income securities? Is it a good time to explore equities?
So that ties into what you just talked about, though.
Yeah. The thing with equities really is that there are usually two perspectives, right? So some people like to trade on the speculative or on the short end. They want to trade over the next 1, 2, 3 weeks, maybe 1 or 2 months. It's because of the volatility in markets, so stock prices going up and down. Some people think they can ride those curves and make some money. If, however, you're trying to build a portfolio and you're trying to create wealth, typically the best thing is to speak to a financial advisor or a portfolio manager who would, depending on the unique circumstances of the individual investor, how old are you? What is the station in life? Are you married? Do you have kids? What are your living expenses? To construct a portfolio around which, you can build something. The long-term view is when you see valuations at the levels they are today is typically to go in on the long. But of course, you've got to have sound advice. You've got to pick your stock selection very carefully. Companies that have value, that are defensive in the sectors where they are, or at least leaders in that, in their industries. Solid management. Of course, this goes without saying. When Buffett will say, look, I invest in management, so you've got to have the right team. And then, of course, you look at the quality of the disclosures in terms of the reporting from the company. Can you trust the numbers they release? Those are the things that should guide it. But you have to be very, 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 very guided. You don't play in the market without proper guidance. That's the key point to be made.
And of course, you guys at Afro Invest give that sort of guidance, right?
Definitely.
Okay, so just to top out, since we're talking the financial sector, can I pick your brain on any particular stocks you like in the financial sector?
So
stocks?
like we said, we're launching the banking report, and of course we looked at the banks, we looked at valuations. Broadly speaking, they are significantly discounted. Price to book today is around 0.6 times. Whereas their peers in emerging markets in Africa, 1.6. So there's a huge valuation discount there. So there is some value to be had. Now the question is, do you want to go in and buy every single bank? When you look at the sector again, we sort of bifurcate the industry by saying, look, there's a top tier segment of that market, which is essentially the top 6 banks: First Union, GT, Zenith, Access, and UBA. those guys, 6 of them account for 80% of the industry numbers, which is huge.
Yeah.
I recall when I started covering banks in 2009, that number was around, sort of 57 to 60%. So essentially, they're taking market share at the expense of the others. Now, if you're going to buy into that space, a couple of names jump at you. So one that I personally like is, GT Bank.
Okay.
For a number of reasons. One, of course, is it continues to retain the best value of the sector. Solid management, quality of disclosures obviously is high and highly regarded. Today it's actually priced at a low, it's around 25 naira, 26, 25, 50, 26, which is a long-term low. Therefore, if I was a betting man and I'm going long, then that's it.
Okay.
I would also look at Zenith. But another one I began to look very closely at recently, of course, following the merger, is Access Bank. So it's essentially emerged the largest bank now, maybe after ETI perhaps. And I think there's some interesting stuff going on there. So it's one to watch.
Okay.
All right. Thank you very much.
Good stuff. How much time do you have?
1 minute.
All right. So look, we've been talking to Mr. Victor Ndukuba, the Deputy Managing Director of Afro Invest West Africa. And again, that banking sector report drops early next week. Yeah.
Monday the 18th.
Excellent. We need to have you back, again to review everything.
Yeah.
Because I honestly do think a devaluation is happening next year. But then that's just me. That's
You
just
think
me.
so?
I don't know.
I don't think so.
I shouldn't go into rumors.
Yeah.
Mr. Ndukuba, thank you so much for joining us.
Thank you,
We really
Rotus.
appreciate your insight, and we'll look forward to that report next week.
Just very quickly,
Yeah.
Rotus, Stay says that you had been warning about agri investment and so on, but he learned there's a commodity exchange market now for agri on the exchange, a recent development. Just asked to throw more light, but you probably throw more light.
Yeah, we'll get into that tomorrow. I think there's one that has been sitting in Abuja for a little while, but we'll get into that tomorrow. No problem at all. Thank you for your messages. We appreciate that.
Thank you all for your messages. Unfortunately, we couldn't go through all of them because today was really focused on the financial sector based
indeed.
on the Afro Invest report. But thank you, Mr. Victor Ndukuba, for coming to break it down to us this morning. And Rotus, thank you very much. We'll see you tomorrow morning.
Yes, indeed.
6:40. Don't miss that. Lagos, thank you for being a part of the conversation. Next up is the travel show with Travel Wings, and you have the opportunity to win something nice and also learn something about somewhere different. Good morning.